All right, welcome to Turnaround Tuesday here live with EmpowerAg Trading. It's been a minute, been a couple weeks. Took a little family vacation and thought, let's turn off that computer. Let's only work when we have to and spend some of that high quality family time. It's important. And being a one-man shop, you just the work never stops, but you do what you can and enjoy the off time when you can. So, got to drive across the country a little bit too. My wife is from the East Coast in Virginia, and I'm not much of a flying man, so I take a road trip and got to see some country, some corn, some beans, even some cotton out there, and get a little crop tour myself. But we're back here, and the markets. Anytime you want the markets to move, just step out of the office, go do something else, get busy, because that's when things happen. And we got ourselves a little bit of a grain market. It's been a blast in your grain markets, pretty shitty in your cattle markets, but looks like maybe they're trying to form a base and do something different here. Let's dive in. We'll quote up your markets here real quick and bring in our guest from agmarket.net, Mr. Connor B. So we'll quote up the markets first, though. Here we go. All right, we got Deese corn, 476, knocking on the highs, 3 cents firmer. We got beans, Nova beans are down 3 cents at 12.23. Your KC wheat market is up 8 cents. September's at 7.32. New crop, July 27, KC wheat at 7.64. Chicago wheat's up 3 cents on the day. Your feeder cattle market, a little bit weaker in your August, firmers in the back months, so kind of mixed. We got the August down 225 at 349.75, while your October is relatively unchanged at 339.85. Fat cattle are they've been trading on both sides as well, and I'd call them mixed to unchanged right now. So macro markets, we got the Dow up 460 points at 52,533. The S&P up 65 points. The NASDAQ up 555. Nice to see those equities gaining a little ground here after a nasty week last week. Crude oil's up $2, $85 WTI crude on the board. Had a couple gaps on the charts and actually filled up that gap on the top side of the chart versus the lower gap that's still there. So with that, appreciate you joining us here today, and leave us a comment, drop a question. Let's talk about your markets. I'm going to bring in my guest now. You know him, our favorite, Mr. Connor B. How's it going, Connor?
I'm doing good. How about you?
Good. Summertime. It's that time of year. Man, it is hot out here. It wasn't nearly this hot on vacation. I don't know if that's because I was in shorts, tank top, and flip flops, but it's hot now.
It's been hot here. Cool. I think we got cool temps for the next 3 days, and then it picks back up. We've caught a little scattered showers, but not a whole lot. But I guess time will tell there.
Summer's going to do summer things, I guess. So why are we always surprised when it's hot in July? I mean, it's going to be a little warm in July. If it wasn't warm in July, something's wrong with the world. And in January, might be a little snow on the ground too, Connor B. I don't know.
It's like when we start talking drought in Brazil. We're early to that, right? Give us a month and people will start hitting that chatter. And I think someone said like, "Oh, so you're betting it's not going to rain in the rainforest?" Okay.
In the rainforest, yes. You've said that before, Connor B. And
I stole it from someone.
That's one of my favorite lines is you're betting it's not going to rain in the rainforest. But yeah.
Oh yeah. Which is funny because the whole, what's the chatter right now is we got the El Nino for us means wet, and then for Brazil it's the opposite. So I make a joke about it rain in the rainforest, but that's going to be the talk, is going to be how's their bean crop going this fall. But I feel like I'm jumping ahead. We've got enough to talk about right now. July 21st, I feel like we got a market, Brady.
It's came out of nowhere, right? Finally, June was nasty, but here we just had to turn that calendar over and get to July, get past that acreage report and get a little 4th of July weather. I think we talked about it in the last stream we did, is July weather is going to make or break these markets. And we got a little bit of a weather story, and these markets are back. Wheat's taken a big jump higher, taking a lot of the rains, and not all that's weather. You got the Black Sea stuff and things over there that have it takes more than one domino to fall to make a market. But wheat's been the leader, and now you kind of got corn and you got beans. So they're moving around a little bit of who's taking the lead, which horse is leading the race here.
Yeah, and I feel it's definitely last week was definitely the wheat market. One of those that we saw, I think a limit up in KC wheat, close to a limit up move, and we still see it positive today. But And then looking at corn and soybeans, we're above 12, right? Good price. I wouldn't mind seeing the corn market rally a little bit. And I think your domino analogy is good because there is a lot of factors that feel like they're close, right? When I look at the corn market, I see fantastic demand, and the chance that we just see a pullback on that trend line yield could get things excited. You want to factor in maybe a little China buying some corn, things could get exciting. And I think that's what makes this market fun right now. It's why we're adding some risk premium. We got to see those dominoes fall. And Brady, I feel like it's everyone's telling me we have a weather market. No way we see trend line yield. I'm looking at these GFS forecasts. Definitely dry in the West, don't get me wrong. But can you do your best to convince me we're in a weather market right now? Because I got to tell you, maybe I'm getting backyarditis to where things look pretty good around me. It's just hard for me to get bullish on weather with what I'm seeing, and it's July 21st. I'm more than happy to be proved wrong, though.
Right. Yeah. Well, I don't know. I go back to my seed days, Connor. And when you sold a bag of seed, you'd say it's 400 bushel an acre corn seed until you put it in the ground. And it's just, we're taking bushels off with every little thing that doesn't go perfect with it. And so we're in a period of time, where we're getting nicked and dinged here a little bit on, is it too hot? Nighttime temperatures? Are we cooling off enough? Is it perfect? And we don't live in a perfect world, and it's not going to be perfect. And it's not going to be perfect across the whole stretch of the Corn Belt. I go back to last year's yield and those numbers. They're numbers, they get printed on paper, but the fringe acres really, they can lift a lot of things when things are right. And if they have good production. So how good is it in the fringe? And my trip across the country a couple weeks ago, going to Virginia, saw a lot of great crops. Corn looked great, fantastic. It always looks better going east because I'm coming from the semi-arid desert, though. We're growing corn in a desert. We can't grow it without irrigation. I'm kind of on that line where if you go east of me, yeah, you can plant some dryland corn and get away with it. Thank goodness we have feed yards around us, because if it's 100 degrees during pollination and not cooling off at night and we don't get pollinated, we can chop that stuff for silage and run it through a cow. But I think it's the fringe acres, and it ain't perfect out there, Connor B. So maybe did the market get too lopsided where we were trading a perfect crop, and now all of a sudden we're realizing, hey, it's not perfect out there, and maybe we got on the wrong side of this. But I think it's a great opportunity. The last couple of weeks, you go on vacation and you want to take time off, but the market doesn't let you take time off when wheat goes up 20 cents and you put 40, 50 cents back on the corn market. I think these are opportunities that you got to be seriously looking at here as a producer, and don't be in a position where you're selling or making these sales decisions at the same time everybody else is. Let's get ahead of the boat here and reward rallies. I like rewarding rallies. I hate panicking on sell-offs and reacting to a sell-off. I would much rather reward a market as it's going up. I don't know about you.
Yeah, absolutely. And I feel like this show, if you want, maybe at the end or whenever, we should talk a little bit positions, maybe, right? What should guys be doing in different scenarios? But I think an interesting one that just happened yesterday was crop conditions.
Okay.
Yeah. I think if you weren't paying attention to crop conditions, and if you were on Twitter scrolling through weather maps, you'd expect them to see a big drop in crop conditions. We didn't get that. We got a percentage drop in corn, and I believe soybeans were raised a couple percentage points. And so, maybe that's early in the game. Let's see what next week brings. And also, right, I know how you and I feel about crop conditions. Take them or leave them. They're a good gauge, but are they just fueling this market? Are funds just waiting for those crop conditions to come out to see if they're going to buy or sell it? They're not, right? But it's a decent indicator. And right now, there's no threat according to the USDA's crop conditions. Now, if we see prolonged dryness, that could obviously change. I think that's going to be the theme for the show. What's the weather going to be for the next 10, 12 days?
Right. Yeah. 10 days of summer weather and not ideal weather is one thing. 20, 30 days of not ideal weather, that's a whole different ball game, especially during this time of year. So do we stack it up together, or do we get some timely rains? 4 inches of moisture in a week is probably as good as half an inch of moisture over 2-week time frame. I mean, how much of it gets soaked in? We get some of these big rains. How much of it goes off down the ditch and down into the Mississippi River versus actually into the soil? A half inch of rain at the right time can, I mean, make or break a crop.
Absolutely.
Yep.
Absolutely.
So cool. Well, what else? Where else should we go? We talked. So crop conditions were a little bit of a surprise yesterday. We got lots of stuff going on geopolitically, outside market, macro stuff. Black Sea, Middle East situation isn't over. You've got crude oil at 85 bucks now. It was at 100. It was going to go to 150 to 200 bucks a barrel. It didn't, according to the experts out there, the big claimsmen. So sells off, but here we are now, kind of in this middle ground of between 70 bucks a barrel and 100. And where's the next move with crude? These markets are at a pivotal point here, I think, of what's going to happen going forward. And I don't think anybody can answer the question of where it's going to go. I know I can't. But let's talk a little bit about positions if you want, Connor B. That's where I'm good to go there.
Absolutely. Yeah. And I think one thing, you're talking about different geopolitical, this might, this might me just being nervous, but when I see different geopolitical headlines, right? We have Iran, we're escalating that, like you said, crude's creeping back toward 90, 100 bucks a barrel. I get nervous because last week what we saw China buying some soybeans. It felt great. I love seeing that flash sale. China bought X amount. It's fantastic. We need them to honor their deal. I don't know about you, but I get nervous when we start talking about geopolitical maneuvering and anything, that puts a dent in that relationship. I don't have any inside information. I don't know what the next week or two brings, but I always get nervous when I see something like that because, it's not like everything's just been great with China and the United States for the past year. It's been closer to about 9 months that we've even had China come to the table. And so, that's one thing that makes me nervous is if we see something like that pull back, and I see beans that are profitable for just about everyone right now at 12.20. But when we look at geopolitical, that's something that makes me nervous. I don't know about you.
Yeah. And to add to that, I love that. That's a great comment because there's things we can control and things we can't. We can't control weather. We can't control politics. We can't control outside macro market forces. The USMCA, we just dropped some 50% tariffs on Canada. Doesn't sound like we want a USMCA agreement going forward. We want bilateral agreements. We want a US-Canada deal and a US-Mexico deal. Mexico is a big buyer of US corn.
The biggest.
So what happens we get into the fall around here and we start having some intense negotiations on that front with our biggest corn buyer?
It makes you nervous.
Something to be concerned about for sure. Yeah. In this world, unpredictable. You never know what's going to come out of our leaders' mouths and if it's in our best interest or not. I mean, you look at the beef market and we've opened the door to Brazilian imports. Where would this market be if we weren't letting Brazilian lean beef come into this market? It's certainly added a lot of pressure at times to this market. So
absolutely.
Yep. So yeah, crop insurance, we talked about that in past episodes. So we've elevated at least on the corn side, right, above some of these levels where it's maybe looking attractive to do some things, or we're getting to those levels again, right?
I think so. Yeah. Let's talk corn and just for me last week it was we kind of chopped around. We had not last Friday, but the Friday before that we had the USDA report. Corn kind of shot up, right? It was a bullish surprise on corn, which is very nice to say. I feel like we haven't said that much in the past year and a half. But then we were very much flirting with these levels, 469 getting up to 470, and then breaking that 100-day felt like a little bit of a stretch. We didn't do it yesterday. Right now we're there. And so, I love any type of technicals that gets us running back toward the highs, get us closer to $5. But I look from 475 to $5, right? Let's have the conversation, right?
Yeah. Yep. So 425. Now we're at 475. 50-cent rally off this those lows, those pre June 30th report lows that we put in. 50-cent rally. It's a 61.8 fib retracement from the 506 high to the 425 low. That's a fib level, the 100-day moving average. These are big levels to clear. Funds have pivoted into a long position.
I
I
should
want for you.
say
Go ahead.
that the fund position's interesting, that we saw the sell off early, right? If everything holds true, if today was the end of the year, we would have put the lows in June. That's not supposed to happen. That's when we put the highs in, right, Brady? So we put the lows in. We saw that sell off, and now we've climbed back to a slight long position. There's still firepower. If we get a terrible GFS forecast and China buys corn, the funds have got room to run this thing higher. But also, it's not like they have a big old short position either. It's very much neutral position is what I'd call it.
Yep. So get off your butt, get your orders working, do something type of moment, maybe. I've been hitting on it pretty hard of do something. It doesn't have to be completely bearish and straight up black and white of hedge the farm and, it's not going to go higher from here, but there's a lot of tools you can use. Put spreads, option strategies, sales with some calls that you can go out there and reward the rally, but stay in the game for longer term. And volatility, it's not terribly expensive to go defend some of those positions and do something.
Yeah, and I think a big thing is the customer, the farmer. Let's say either if you're in the scenario where you don't have bin storage, so the bushels are moving this fall, or maybe you have the bin storage, you're going to move them in December because we have cash flow needs, right? For regardless of how you're set up, that grain has got to move in either October, November, December, around that time frame. This is an actionable level to me. If you're behind on sales, it's time to get something locked in. The grain's got to move. We know how we can get upside, right? We can easily do a December HTA, December futures sale, and then re-own it with some March calls, December calls, however that works for your operation. But I that's where right now, that's where my mind goes, right? If we need to cash flow stuff, there's no worse feeling than it being October 15th and you call me and say, hey, basis sucks. Should I store it? Should I sell it? What do you think I should do? Right. And now's the time. If you're in a decent area, you're behind on sales, I think you should be looking at the markets right now.
Yep. Let's be proactive, not reactive. When every farmer in America is going to have a crop, when the combines are going to be rolling, when those bushels are going to be hitting the bin. And a lot of times those need to be converted to cash to pay bills and buy mama Christmas presents, buy the kids some Christmas presents, right? So July rallies that we've just seen here, July, August timeframe, typically presents some good opportunities to get ahead of the game with those things. So I like it, Connor B. All right. Cool. Anything else that we need to talk about before we go? We haven't really talked about cattle, but I don't want to talk about cattle.
I was going to say the only thing cattle is if you want me to count the down days in a row, how many they've been. I won't do that, but I think isn't it like didn't we go for a run where it was like 15 or something?
I think August fat's down 15 straight days. Pretty big record, pretty nasty slide. So
is in your opinion, this cattle move, is it as much a seasonality, and then we're coming off the highs, right? We've been just a mix of things, in your opinion?
July, I think it's a great question, Connor. Leverage in the cattle industry, buyers and sellers, and leverage on the cash side. What's the consumer doing? The beef side of things. I think there's a lot of factors that give the packer leverage over the feed yard. Box beef seasonally is weak in July, and we see a rebound in August. So I'm hoping that we are starting to see some of that. But with the pressure from imported beef, how high can the cutout go? And does that limit, where this market can go if the packer isn't willing to take bigger losses? So right now they're passing those losses off onto the feed yard. Lots of questions on, we got a July inventory report, the biannual cattle inventory report. That's Friday. Have to mention that. Be interesting to see what the data shows there on where this cow herd's at and calf crop size, some of those details. But this market's been good for a long time. It's went higher than anybody could have guessed it to gone. It's lasted longer than many thought. There's a lot of headwinds it's tough being a cowboy. It's tough being a rancher. It's a job that doesn't always pay you. And I don't know why the last few years we act surprised that we get to make money being in the cattle business. It should be something that's a given every year, but we are just surprised when we actually get to make money doing it. So usually it's about building equity. You build equity in your cow herd, you build equity in the land. But right now it's been great for the cow calf guy, tough for the packer, getting to be really tough for the feed yard. Yeah, it's nice to see us base out here. I think it's this sell-off has presented opportunities, Connor, for us to manage positions that are on. If you have LRP that's on the system, protecting the equity in your LRP for this type of rally. If we see a bigger move going up, if you've got option positions or hedges, how do you switch from a semi-bearish position into a semi-bullish position? Manage the moving market, get control. Don't be a victim of these sell-offs. They happen. They happen almost each year. We see a $40, $50, $80 slide in these markets. Don't be caught off guard by it, and embrace that volatility and progress forward. So then get to go be a cowboy. Try to make some money and go be a cowboy. That's what I want to do.
Absolutely.
So thanks for teaming me up there, Connor.
Yeah.
All right. Weekend wrap video. I send it out every Friday to customers, talk through just what happened throughout the week in your markets, go through some actionable items, actionable updates, specific strategies you should be looking at. You also get text updates. So if you want to join the mailing list, I invite you to head on over to EmpowerAgTrading.com. Make sure you get all of our content and leave your name, number, email, and we'll make sure you get all of it. So appreciate you being here, and appreciate you being here too, Connor B. agmarket.net. And
let's see. Today, I feel like right now we're above that 100-day. We're gonna have to remember when we come back and see where we're at. Right, 473. Maybe I'm just putting more importance than I should, but it feels like an important number. It'd be nice to close above it. We'll see where we go today.
I like it. Well, look at that March contract too. 492 on March corn. Okay, you got grain in the bin. You're storing the grain. The spread's decent still.
I agree.
Paying you to put it in there. Maybe some better basis opportunities out there. Your stored bushels. Hey, now's that time. That famous line. Do something. Do something.
I'm with you, and I agree. Usually I'm a decent HTA guy, right? Unless that spreads at 15, right around 15 cents. I know it can get a little bit better, but it can sure get a heck of a lot worse. So I'm 100% with you there. If we're putting them in the bin, let's look at some March HTAs.
Yep. Good stuff, Connor B. All right. Can I have you back next week again?
Let's do it. Let's do it.
All right. Well, have a good rest of your week. Thank you all for joining us. Like, subscribe, share, and appreciate the love. With that, we'll get out of here. See ya.
See ya.